It's interesting to reflect on my professional journey as I sit in my bedroom working remotely during the time of COVID. My professional journey started in college. I went to George Washington University, which was across the street from the World Bank, and I was privileged to get an internship my second year in university, and started working with CGAP. And from there, I stayed at CGAP for about 10 years, and which took me to all over the world, but also to be located not only in DC, but in Kenya and in Paris. When I left CGAP, I decided to pursue my MBA and went for an MBA in France and at INSEAD. And after that, I found myself at the Bill and Melinda Gates Foundation in Seattle, where I was for 7 years. The last year, I was on secondment to FSD Kenya, which is where I now am. I originally joined as the head of digital innovations, but now I am the CEO. And so it's been interesting to think about how I've really been in this field, the same field for 20 plus years. But the field has changed so much in those 20 plus years. When I first joined, it was really microfinance, and for a lot of people, still just microcredit. And then microfinance began to be relabeled and redefined and to mean so much more things. And then over time, it became financial inclusion or access to finance, maybe. And now at FSD Kenya, we really think about this field and this area of work as inclusive finance, which is really how does the financial sector work for everyone? It was exactly 1 year ago that the first case in COVID in Kenya was diagnosed. And we were together as a team on that day. And I spoke together with the team, and we really thought about what's going to happen. What does this global pandemic mean for Kenya? What does it mean for inclusive finance? What's the role of inclusive finance in helping to deal with a global pandemic? And we brainstormed some ideas. We thought kind of blue sky, what might this look like? What are the potential highs and lows? And put out a blog at FSD Kenya, kind of what role could finance play in a pandemic? And I just put out another blog this morning, 1 year later, to kind of reflect on what we got right and frankly, what we missed. There were a lot of things that we expected would go badly, and they have, whether that's the negative impact on micro, small, medium, and enterprises, negative impacts on children and the education sector, negative impacts on sectors like tourism, global trade, et cetera. And it's been a hard year, not just in Kenya, obviously, but around the world. There were some things that, although we knew would be issues, I don't think that we anticipated they would be as bad as they were. The biggest one of those is how gendered the impact of COVID-19 has been here in Kenya. And as we look at the analysis, as we look at the data, it's hit women harder than it has men. And this is on small things and big things. For example, when we were looking at retail traders, women had more responsibilities to take care of children who'd been sent home from school. And so their businesses had to be open for shorter hours. So they were already dealing with depressed economic conditions, and then they couldn't stay open later. Everyone was hit the same by the curfews and some of the other measures that were put into place to try to control the spread of the virus. But women found themselves also more likely to be the victims of gender-based violence, to have a heavier load at home, to have their businesses impacted, to be laid off of work, and some of those things. And so I hindsight 2020, I wish we had thought more about what we could have maybe done even then to think about how to mitigate some of those gendered impacts of COVID-19. As we think about what we have done and what we did over this last year, one of the things that we did with partners was work on trying to find out what was really happening through both qualitative and quantitative research. And we think that that has been very important in helping policymakers and private sector decision makers have the data that they need to make good decisions about how to mitigate COVID 19 and the implications, especially on the economy. Some of the other activities that we've done with partners, with government, have been very slow. And so as I think back, are there things that we could have done to accelerate some of that work? For example, the guarantee fund that was targeted at MSMEs has only just been operationalized in January, despite lots of work going into that. And so as we think back, are there ways that we might have been able to get that process to go a bit faster so that MSMEs could start benefiting from that guarantee structure earlier, sooner, when they were most hard hit? Another thing that I think, as we reflect back, is that we put pauses on things, thinking that this was going to be a shorter term, or at least shorter the term than it's been, situation. So if I could go back to March 2020, there might be some things that I would I would keep going on, right? And maybe we'd have to change the way we did it, or we'd have to do it virtually, or find ways, but not wait for things to come back to normal, because it's not here yet, and it's not going to be here in Kenya for a while. And so as we think about the role of inclusive finance here in Kenya, and what the changes have been and what the changes are going to be, we're pleased to see that people have leveraged finance to help get them through. In the early days, we saw a lot of people using their savings to store up maybe food supplies or other things that they needed. We've seen people accessing loans, although we've also seen a worrying increase in non-performing loans and people being unable to repay debt. We also have seen insurance, actually, health insurance in particular, play a role, and a greater demand for that, and a better understanding of what that could mean. We've seen emergency loans going out, but the financial sector wasn't designed for a pandemic. The world wasn't designed for a pandemic. And so there's a lot of talk about how do we build back better. One of the things we've been thinking about is how do we put the institutional frameworks in place within the public sector, within the private sector, so that whatever the next crisis is, whether it's the pandemic or something else, that the financial sector is able to pivot, is able to adapt, and really meet the needs of those who are the most vulnerable, low-income households, women, people with disabilities, people in remote areas, and micro, small, medium enterprises. So in short, I think the answer to how can the financial sector better prepare for such crises, it is to take a longer term view. I think the incentives in the financial sector encourage a shorter term view than is really healthy for the overall financial sector, and that the role that the financial sector should play in supporting the real economy to deliver. And as I think about what's happened in this past year, like I said, the financial sector has played a role. It just wasn't ready for it. I think there's some positive signs and some ways that they pivoted quickly, and we're in a position in Kenya to pivot quickly as compared to some other African countries. So for example, one of the big things we've seen in Kenya is an incredible increase in digital transactions. And that was already happening. Kenya is well known for the M-Pesa mobile money story. It's well known for agent banking, and how banks have already shifted so many of the transactions out of their traditional branches into agents, ATMs, and mobile channels. But we've seen that grown even higher this year in Kenya. One of the stories that I like is that there's a merchant acquirer here in Kenya that we work with, who had always acquired merchants physically, gone there, seen the premises, delivered the training on how to use the, in this case, mobile payments device. And they realized that that wasn't necessarily required. And during COVID, when they wanted to make sure they were protecting their team from undue exposure, they were able to do virtual merchant acquiring. And they were able to take what they needed and do that in a very virtual way. And they realized that wasn't necessarily only good for a pandemic situation where you need to limit physical exposure, but it's cheaper. There are ways that they could put the systems in place so that that could be a long-term, cheaper way of doing business and more convenient for the merchants, makes it easier for them to be able to be acquired and start accepting digital payments and using them with their customers. In terms of low-income households, I think it's really important to look at where do low-income households save? Where do they borrow? How do they manage risks? And we know in Kenya, as in many other countries, the informal financial sector is incredibly important. One of the things we've seen is that chamas in the beginning, which are groups of often women, but also men who get together to save and borrow. They were not able to meet because of the restrictions on movement and meeting in larger groups. And so they had to find new ways to be able to save together or borrow from each other. But at the same time, they were also hit by reduced incomes in their businesses or reduced employment. And so we saw a lot of chamas, especially early on, really struggle with how to continue what's been part of Kenya's culture for many years as part of the fabric of the financial sector. We also saw that SACCOs, savings and credit cooperatives, also struggled in Kenya during this time. Some of them were not digital, so they didn't have digital ways of collecting. Even smaller than a SACCO or financial service associations. And while many of them had M-Pesa agent lines, they didn't have M-Pesa pay bill lines. So they weren't able to collect loan repayments from their members until they could get it. And in the early days of the pandemic, there was a large number of people or businesses trying to get access to those pay bill lines, and so there was a backlog. And so those are the things where if there were systems in place that made it easier to self-acquire that or self-register for those things, that's the kind of thing that could help in the future. The last thing I'll just say is that one thing that we've seen over this last year is that deposits in Kenya have actually increased. And that may seem counterintuitive, but if you look at the deposits that are in banks, that has gone up over the year, and even compared to last year, it's not just kind of an end of year thing. And we don't know exactly what's going on there, but it does seem that as people don't have the opportunities maybe to put into their business, or as the economy still stays depressed, they're just parking their money there for a bit. It could also be that people got caught on their back foot at the beginning of COVID and don't want to be in that situation again. So want to make sure that they've got something saved away for the next rainy day. I said that was the last thing, but let me add one more, which is that international remittances in Kenya have also gone up. And that was also a surprise and not true across some other countries, where Kenyans are receiving more international remittances, especially from North America, where the jobs maybe have been a little bit more stable than in Europe. At least that's what we're seeing. We're seeing more coming from there. And that has helped families we can imagine who are receiving it. However, when we think about low-income households, they are the least likely to receive international remittances and are much more likely to rely on domestic remittances, which have also been depressed in this time. In the Kenya Financial Diaries, what we saw in the early days was that people who used to rely on receiving local remittances from, especially people in rural areas who were used to receiving remittances from people working in the cities, not only were not receiving those remittances because people had either lost their livelihoods or income, but often were also receiving the people instead and having to figure out how to feed additional mouths who've moved from the city because they didn't have work to a rural home. So those are just some of the many things we've seen over this last year and can help us think about how do we prepare for the next time. And we're not out of this one yet, I should say. So when COVID-19 hit Kenya, FSD Kenya was very keen to figure out how could we help our partners, our staff, our other stakeholders really mitigate this crisis. And so we didn't change our strategy. We didn't change the areas that we worked in. what we did is we looked at where do we have a comparative advantage as a market facilitator? Where do we have existing relationships, existing projects that we can use to leverage those relationships that work to play a part in helping during these difficult times. So one example would be on cash transfer programs. We've had a long history supporting social safety net payments here in Kenya, digitizing those so that people can receive them either through bank accounts or through mobile money. And so we worked with government partners to really help them to leverage that infrastructure that was already there to make additional payments. Now, that said, I think we can all be honest with ourselves that those payments didn't always reach the people they were supposed to or when they were supposed to, and that some families did struggle having not received what they were expecting with social safety net payments. But it is an area that we were intentional about right away. We also collaborated as part of a public-private partnership with many other players, trying to determine how could we raise more money and get more money into the hands of those who are hardest hit. And we did a small pilot, for example, focusing on parents with children in low-cost private schools who had children at home, was maybe interrupting their ability to earn income and feed their children who were used to being fed at school, for example. Another area that we looked at was in agriculture. We looked at what is the way to continue to make sure that agriculture happens during this time. Interestingly, agriculture did really well during COVID-19. We've spoken to ag input dealers who said their sales have never been better. And part of that was with people moving away from the cities and staying in a rural place where they had a connection or a home. They took up farming, and they knew that at least they would be able to feed themselves in that way. That said, not only did Kenya experience COVID last year, we also experienced locusts and are experiencing locusts as a really negative impact on the agricultural sector. And so we feel like we've had several different crises that farmers have had to deal with. We saw that the pricing of goods being sold really changed when you looked at anything that needed to move across borders. Even county borders, not even looking at the regional trade between countries. And so, maize meal, unga, in one place might cost much more than another because of the transport costs, or because it was because of restrictions of movement. It was much more difficult to get that food there. Another area that we looked at was looking at the policy and regulation space, and really worked a lot with policymakers to think through how could they get the data they need to make good decisions to help customers. I think that the central bank in Kenya has been a real leader in thinking through possible ways that it could encourage and entice financial sector players to ease the pain during this, and some of those have gone better than others. But for example, the immediate decision to make all transactions under 1,000 shillings, which is about $10, free, really saw an increase in the use of payments in that range under $10. We also saw a decision to make moving money from bank accounts to mobile money free, and that encouraged people to use those more digital payments. Where I think it's been a little bit more complicated, let me say, is in the credit information sharing and decisions made around how to restructure loans, when to restructure loans, how to do credit reporting in responsible ways, how to make sure that those who have a good credit record can still be risk-based pricing can be based on that. And some of the areas around credit information sharing, I think, like I said, has been more complicated in this last year. So it's interesting to think about the idea of COVID as an opportunity. because it has been such a difficult and had so many negative impacts on Kenyans, on the Kenyan economy, on people personally. And yet, I understand why you're asking that question. And I do think that there are some opportunities that are presented by what's happened because of COVID-19. None of us would wish that it came for that reason, but now that it's here, we do need to think about how can we make the most of it, that it's here. So one area that I would say is one we've already talked about, but it's really about how we can reorient ourselves towards a longer term view. And I think that's important for thinking about things like crises, but also some of the persistent crises like climate change. You know, as we think about building back better from COVID, how do we build back greener? How do we build back in ways that are more resilient, not only for people, not only for the financial sector, but for the earth? And really, you know, a country like Kenya, who's not the worst emitter of climate change factors, it really has more been the one who has faced the consequences of climate change, especially in the agricultural sector and issues like droughts and even locusts, you could say, are somehow linked to climate change. So there's this opportunity to think longer term. I think that's very important. I think there's an opportunity to really seize this digital uh, momentum. And it's funny to say that in Kenya, because I think around the world, most people think of Kenya as entirely digital. But as you know, the number of transactions that are still in cash are huge. And so I do think that there's still opportunities for both individuals and for businesses to benefit from the promise of digital in terms of saving time, saving money, and also being able to design financial solutions that are more catered to individual needs rather than being kind of a one size fits all approach. So I think that's an opportunity. I think another opportunity is to really look at the sectors and the opportunities within Kenya that can be grown and where Kenya can serve its own needs. I think one of the stories that we saw in Kenya, and I'm sure was across other countries as well, was the ability of Kenya to quickly reorient its manufacturing section to develop PPEs. And so there was a significant a capacity to be able to do that for ourselves rather than having to import the PPEs that were required to really protect people and businesses and government. And so I think it's an opportunity to take a step back and think, what else could we produce locally? What else could we manufacture locally? How else could we that maybe not only for Kenyans, but for the region and for even export. I think those are really important things to think about. I also think that there's an opportunity to think about how we mitigate risks. Insurance, as you know, has a very low penetration in Kenya, and that's for a lot of good reasons. The value for money trade-off isn't always there for households. What you get versus what you pay versus the risks. And so I do think there's an opportunity to really try to design for now. What are the solutions that could really help people mitigate risks, whether it's a traditional insurance product or whether it's a bundling of things together to help families feel more confident as they face the unknown. So in terms of what advice I would give, I'm not one who likes to dole out advice. I think we're all learning as we go, and we're all on a very steep learning curve as we face COVID-19. You know, I said at the very beginning that I've been in this inclusive finance field for 20 plus years, and I think it's been a steep learning curve the entire time. You know, whether it was when I was at CGAP and thinking about how to help microfinance institutions become more sustainable, or when I was at Equity Bank trying to figure out how to really get the credit department functioning the way that it could so that it really could serve the needs of farmers and low-income entrepreneurs. Or whether it was when I was at the Gates Foundation and we were looking all over the world about how to think about the way digital and different financial products and low-income people, how they all intersected And more importantly, not even how they intersected for the sake of finance, because nobody does anything for the sake of finance, but how can finance be designed in a way that it unlocks value in the real world, in the real economy, as we like to say, although I'm not sure everybody knows that term. Real economy, for those of you who don't know, just means everything that isn't the financial economy. So as we think about how can finance play a role in the agricultural sector or in the health sector or in education or affordable housing, these are the questions that we need to ask. How do we take what we know now about what's happening in those sectors, how those sectors have been hit by this pandemic, and then how do we reimagine what the how the financial sector could meet their needs, not just now, not just in a few years, but over the long term. Kenya has a goal of by 2030, becoming a middle income country and really eradicating poverty, and has goals around um, being a more green country and more green economy, a more resilient economy. And so really trying to step back and take a look at how can we do that? How can we do that? What steps can we take now where we may not see the results right away, but in 5, in 10, and 15 years when we're looking back, we'll say, those things we did back then made a real difference in people's lives now. And even if we don't look back and say that, I think we should be thinking about hoping that they'll be in the situation that they don't even need to look back and say what went wrong, but rather, hey, this is pretty good.